Now, if you look on this chart, there's three things shown. There's the dollar index, there's real yields in the light blue, and there's gold in the yellow. Now, when real yields in the dollar falls, that tends to be a lovely environment for gold gains. So when you've got a falling dollar, falling real yields, gold tends to gain. At the moment, what have we been seeing? We've been seeing falls in the dollar, falls in real yields, and that's been nicely lifting gold. So these last few weeks have seen significant dollar drops, and it's been on expectations that the Federal Reserve has reached a peak in interest rates. A stretched dollar long position, you can see in the CFTC market, these stretched dollar longs need to unwind, particularly if the Fed has reached a peak of interest rates. So we could see further dollar selling, and we've seen a strong bid come into bonds, and all of this has been highly supportive for gold. And we can see gold has found strong bids. The earlier move in gold that you can see here from the start of October was on the Hamas invasion into Israel, and that was geopolitical risk boosting gold. Nevertheless, on gold's pullback, it's quickly found buyers, and if we look at it technically, on the weekly chart, we can see that gold is impulsively moving higher, and on the monthly chart, you can see we have a big bullish engulfing bar, engulfing 6 months of previous prior action, looking to test all-time highs, with a run, if we can break that daily resistance level, up to 2050, looking highly likely as bonds find buyers, the dollar falls, all of which should support more gold upside. Now, does this mean that it's worth buying gold? If you look at gold seasonals, what you notice over the last 25 years, that we're heading into a very strong period. In December and January and February, gold tends to see decent gains. Now, from now, through to the sort of end of December, gold is pretty much flat. Okay, slight positive return, 48% winning trade. But if you look at it from the last Fed meeting through to early February, let's take it to the end of Feb, 24th of Feb, then you see over the last 25 years, gold has on average returned 5% and a 72% winning trade percentage. So does this mean that now's the right time to buy gold? Major trade risks. The major trade risk here will be from the Federal Reserve. If the Fed needs to keep hiking interest rates, we could see the dollar strengthen again. We could see sellers disappear from the bond market, and that would be a natural headwind for gold. Remember, don't just trade it, seize an exit. What we've spoken about here in this video is seasonal analysis surrounding Microsoft. We want to put seasonals, fundamentals, and technicals all together for a great trade. We have the latest high probability swing trade setup for you ready to grab right now. Just click below this video and we'll send to you the current seasonal swing trade pick for the current month straight away.